Let's Get Down to Business is presented by Bravo, the marketing arm of Ash Brokerage Corporation, the practice enhancement company.
All this week, it's our series on life insurance audits. And on today's show, the life audit in the fiduciary community. And with me today is CPA Richard Newman. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. Let's get down to business. Well, welcome to the show, Richard.
Thanks, Steve.
Well, now we're going to go into your community because you've been in ours now this whole week. I want you to talk about your practice doing your My Life audit, which is huge. And I actually have an example of your insurance audit, which is really awesome. And let me tell you, this sample is worth your education. It's a tutorial. If you've been in our business a long time, say, Steve, I've never seen an audit done like this. This is a huge learning curve issue, and it could really position your practice to be able to sit in front of your clients and do kind of high-end material like this. To me, that's a huge issue. But we're talking about the fiduciary community, and do they appreciate docs like this?
We're getting them to understand how much they appreciate it. What we're finding is that the life insurance audit either is going undone in the fiduciary community, and that fiduciary community could be a fiduciary, an actual trust company. It could be a CPA who's acting in that vein, or an attorney who's acting in that vein, or a client of an attorney or a CPA that's acting in that vein who has no understanding as to what their fiduciary responsibility is under the Uniform Prudent Investor Act. Now, some states like Florida have created a reduction of trustee liability in life insurance trusts only, but it's very narrow, and the document has to have the information in it. And what we're finding here is we're finding sometimes a major fiduciary trust company asked us to review a policy on somebody, and happened to be a policy that was underwritten by Sun Life, who was sold to a private equity firm. And we found out, as a result of that, they paid virtually no dividend. There was just under $1 million worth of cash value in that policy. And what ended up happening, the dividend was $1,600 for this past year. That in no way was going to support that. The fiduciary didn't understand that, didn't know what it was about. We're now meeting with the client and going through to make sure that if we can find something better for them. We've also found out that trust companies didn't realize dollars had escaped them to other advisors, and going through the insurance audit process has allowed them to understand that their client is working with two different people when they thought they were only working with them. And one of the big areas of concern as a fiduciary is what percentage of this money is going to stay here when grandma and grandma pass away. If you're involved in the estate plan and in the life insurance discussions and you bring those people in, I believe that they have a significantly greater chance to maintain those dollars. We in the business call making them sticky.
Now, when you say fiduciaries, are you saying tax attorneys, probate attorneys, or trust officers from banks?
Trust companies from banks. Let's think about it. Where does an attorney make a great deal of their money? They do the planning for somebody up front, but the significant portion of the fee is when they ultimately settle that estate. Well, I would hope that most attorneys are doing a good job, especially in the affluent families, that they are doing a good job of reaching out to the next generation to ensure that they are the attorneys to handle that. But many times the kids live all over the country. The attorney and the parents live in South Florida, and the kids are all over, and they all have their own people. So again, how do you place yourself in a position that all the work that you've done is going to be appreciated? But you know what we're also finding from the fiduciary community and the legal community is that when we look at life insurance, in one of our previous sections, we talked about charities and the review of life insurance and how that made that donor much more tied to that charity. What we're finding is that when we look at the life insurance policies, so many of the plans that they sit on top of are outdated. And I'll ask an attorney, what percentage of the estate plans or business succession plans that you've been involved in over the last 5 years still fit like the glove they did that the client walked out of the office? Is very few do. The next question usually would be, do you have a formal process in your office to reach out to your clients knowing this? And they say no. And then we start to talk about these professionals marketing. It's talking to people like me, and I'm saying you should be talking to your clients before you talk to me. And by the way, their life insurance, which supports most of these, 70% of the time there's a problem in it. if we begin to reach out and discuss their life insurance, it has no choice but to morph into a discussion about their estate plan and what else should they be doing. We've been at the crux of hundreds of thousands of dollars worth of fees that have been generated merely because we got the client to look at their life insurance, which spurred the discussion of either philanthropy, or there was a piece of real estate out here that had to be transferred to a trust, that had to be valued, that the CPA had to get involved in. You had to set up all kinds of trusts to create this. We had to set up a private foundation. So the irony is in many of the circumstances, the savings that we find is paying the legal bills on behalf of the clients. And remember, that savings take place every year. The legal bill is once. So we're really at the crux of getting our clients to really understand what they want to have take place, because our discussions center around what's here, and the monetary issues, everything else follows from there. But that's spurned by the review of the life insurance.
When I think about that, what would you say when you bring this up and you have a first contact discussion? Are you looking for certain things in the policy that you've seen consistently are things that you can open up right away? Because there's patterns.
Oh, there's patterns. The one I love the most is somebody had a policy for the last 40 years that's laden with cash, and there's virtually no spread between the death benefit and the cash value, and the client's still making premium payments. In those situations, that product was great. The product did everything they wanted it to do for the first 30 years that they owned it. It built up cash. Now I just want to use that to reflect what their new needs are, being an estate planning need.
So you still see contracts that old on the books when you meet with clients?
Unbelievable.
That does blow my mind. You think of that, everybody calls us the biggest replacement industry in the world, and here we have all these contracts online. When we come back from the break, we're going to continue addressing life insurance audit in the fiduciary community as part of your overall business strategy, that you can position your practice as the premier provider of product information, not only to the fiduciary market, but also as a prospecting tactic for new clients in your community. And you can request your own life insurance audit on your clients at downtobusiness.ashbrokerage.com. Just fill out the request form. And while you're out online, don't forget to take your 30-day free trial offer on Backroom Technician. Just go out to brtnow.com/trialsignup.aspx. We'll be right back after the break. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, welcome back. I'm Steve Savant with Richard Newman. And remember, you can watch all our episodes of Let's Get Down to Business, including my weekly consumer show, Steve Savant's Money, the Name of the Game, right out at ashbrokerage.com. Just click on the show logo right on the homepage. And just a heads up, before moving forward with any of the ideas you hear on our show, always consult your tax advisor or legal counsel, as well as your broker-dealer compliance officer. Well, let's get down to business. We're talking with Richard Newman, CPA, and this is a sample of his insurance audit. It's not as big as the encyclopedia, but it's out there. It pretty much covers A to Z, everything we've been talking about all this week.
Absolutely.
From ratings to balance sheets of carriers to possible options. And this is what I really like about this audit. We usually can discover deficiencies, someplace where we can really improve the client's position. But what we've done is we've made sure that we've done our due diligence. I saw several carrier offerings here for this example, which is what you do all the time. It's not just one carrier. You're showing several carriers to show we've looked at many of the leaders in the marketplace, whether by medical, whether by finances, ratings. We've looked at all this. This to me is a really great turnkey operation.
I think it really works well because it really outlines what people's needs are. It also shows the level of due diligence that we have. What we suggest is when a fiduciary engages us to do this, that they take that and they bind that in their file as evidence that there has been some significant due diligence. There was a case not too long ago where a fiduciary did get sued. It was a Cochran case. And what ended up taking place is there was a lower death benefit that was actually created. But the bottom line is the fiduciary had done all their work. They went out to the proper people, and an event took place that was sudden that created the change. But the bottom line is the fiduciary did their job. And it was documented because they used professionals in that vein to make their decisions. And would a prudent person have made that decision in that situation? So we believe the audit does. Many times the audit just confirms what the client has is correct. Remember, our job is, in my belief, in my firm, and we market to places like ACTEC, the American College of Trust and Estate Counsel, which is the highest of high-end people. We'll have a booth at Hecklerling, and many of the producers go to Hecklerling. You should stop by our booth there. At Hecklerling, we have 2 lunches that we run, and we ask people to come to those. I've yet to be able to get on a dais to speak there, but we're working on that one as well, Steve. Bottom line is what this does, it really documents what's taken place. And the audit that you're looking at, this was the cousin, I think this was the aunt of an ACTEC attorney, the best of the best, his family member. This is a policy that had a $500,000 death benefit. It was a second to die policy that the client was paying $6,500 a year. This policy was guaranteed to lapse at age 100. So what happened was, number one, when we got the in-force illustrations, a little over $4,000 got the policy to age 100. Why are you paying $6,500 if $4,000 got you to age 100? It's not going to go any further after that. Invest the money in case something like that were to take place. We actually underwrote these people. This is a couple of years ago. If the client wanted the same death benefit, we could move the cash from policy A to policy B and pay about $500 a year, not $6,500 guaranteed, for life, not age 100. If they wanted to maintain the same premium, we'd have gotten them over $1 million worth of death benefit. Now you tell me, what would your client like? They could have selected, I don't remember what they did here, they may have selected $750 because they wanted somewhere in between. So they saved money. They had a contract that was not going to guaranteed to lapse at age 100, was going to be enforced for as long as they lived, with significantly lower premium, with guarantees. The other contract had similar guarantees issued by a really good company, but we doubled the death benefit for the same cost without having to worry about an age 100 type of situation. You tell me, did that CPA or that attorney who referred this to us do a good job? Did he or she do the right thing for that client? I believe that they did. All we did was bring it to their attention. These things need to be looked at. These things absolutely need to be looked at on an ongoing basis with using a process. It takes time to break into that marketplace. We've been breaking into this marketplace for the last 5 years with our life audit concepts of marketing to the advisor, to the high end. So we've been there, we're relatively well known throughout the country because of our audit. All we want to do is, our PR firm is talking to us about, is Richard, just telling everybody about the dirty little secrets in that life insurance industry and what to do about it. Don't come to me with a problem without coming to me with a solution. We're going to come to you with a solution. And my only suggestion, anybody in this field, if it's gray, the client keeps what they have. Your objectivity here, because we don't charge for the audit, is extremely important. Your credibility has got to be created and recreated time and time again, because they know we want to sell a product. I only want to sell a product when it's the right thing to do, because think about being able to give this valuable information to an attorney or a CPA or a wealth advisor that has the key to 100 others just like that need that service, that you know that 70% of those people need your service.
So you're not selling this even as billable hours yourself?
No.
And you found this is a huge inroad.
It gets us in. What we want to do is we want to be the life insurance advisor to those markets, the CPAs, the wealth advisor, and the attorney. We will never be in competition with them. We'll never render legal services. We'll never render accounting services. We'll never render investment management services. Our sole goal and our whole reason for being is to make that professional refers to us better at what they do, having us in one little area called life insurance.
Richard, I want to thank you for being on with us all this week. I love your life insurance audit. It's huge.
Thank you.
Well, that's our show for today. Don't forget you can read my online insurance commentary, advisor blogs, and articles on Producers Web, as well as my answers to consumer questions on the Insurance Library. And remember to view all our past episodes on the on-demand section located at downtobusiness.ashbrokerage.com. So follow me on Twitter, Facebook, LinkedIn, or just email me, steve.savan@ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savan.